All right, so we've got a question from our resident momentum trader. Wants to know about using multiple time frames and what the charts are that I've got on in the background, top screen, and those are longer time frames. So if you're scalping or you're doing the volatility bands, it's always a good idea. When I set the bands up, I'm always looking out to a bigger time frame. It's a good habit to get into. You can see the red chart in the top left here is the monthly. The yellow chart is a weekly. Green chart is a daily. The orange chart down at the bottom there, that's 125 ticks. So every time that 125 ticks print in real tick, a new bar forms, and it just records tick by tick what's going on inside the bar. So when I'm putting these together, what I'm looking for is just, well, today, Tesla on the 5-minute chart, we're moving higher. And then I want to see, is there anything in the way of that trend? Because you know that I'm always looking for probably 1-2 pokes at a retest of something, and then I let it go. That's because this kind of thing happens right here. You get these pushes through, and then it's hard to figure out, where should my stop be? What do I want to do in terms of timing an exit? But if you look back on your longer term charts, what you get is, here we are on a weekly chart. This was overhead resistance. So 392.23 for a good while. We've been looking at that price level saying it's gonna bump its head here when it's trying to push up through on the intraday chart. So if I can line up shorts there with the volatility bands, if I can line up shorts there from when I'm putting together the intraday trading plan for the following day, I'm looking at that region and just saying that's going to be overhead resistance for a while. However, you get a day like today where you have yesterday pushed up through this and today gapped up through this. Now the next place you're looking is, well, this area right here is weekly resistance, and it's also then monthly resistance, obviously, because it's weeks become months. So when you look at this and you're trying to figure out what is the top of the range going to be for the day, where can I expect that price is going to bump its head when it's moving higher, this 433.35 is, or 431.50, you're not going to get these lines really that exact on these daily and weekly charts, but you're just looking at this and it's coming up in, and it's going to have a hard time up at the top of this range, which was where this bar this morning made this weekly high and bumped into price, or made this retest of the weekly high. So yesterday was a high of just around 432, and today we got up into this part of the range and reversed. So you're just going back and you're trying to match up from all the evidence in front of you, where was the order flow that did something with this stock. The thing that's interesting, or the thing that I find interesting looking at these charts, is what happened in the beginning of January. Now, all of this is with the caveat that you had Elon Musk doing the Doge stuff, and there was a pretty negative reaction to it. But from right here, we had this big fall off. So what a lot of people are anticipating when they're setting up the momentum trades or the intraday trades is that retests of this high could, well, theoretically they could wind up all the way back down in here again, but more likely you're going to get just quick pushback on the intraday chart that gets you sort of boxed into this chunk of the range. So, the question was, well, how do you use the multiple time frames when you're analyzing or when you're trying to figure out what's going to go on with a particular stock? This is Tesla, right? Just because we're focused on Tesla right now, because this is where a lot of the momentum is. Used to be all we did was focus on Apple. It's always about who's got the momentum right now. Which one of the Magnificent Seven is really pushing these boundaries, these envelopes that we create to bracket up price. And if you go out to the next higher time frame, next longer time frame, it gives you a totally different picture than just looking intraday. Intraday, you might just get to the point where John, for instance, was constantly looking to short Tesla to short, because it looks like it's going down or it's going to go down faster than it's going up. But if you go out into the longer, on a monthly, it's climbing out of the ditch. On a weekly, it's a slow, steady climb. All of these tops and bottoms, everything's moving. So the ease of motion is not necessarily going to be to the downside until you get into a portion of the range where it's bumping its head. It's coming up into a price area, and there's been a lot of support and resistance there before, and now you start to put together the logic of, I think I see something going on. I might not know exactly what's going on, but what I see for sure is there was order flow there, and then there's likely to be order flow there again. So if we get short side setups from, say, this level right here, and those short side setups translate onto the intraday chart. When we're picking apart the 5-minute chart, we're looking for where's the trend going into the end of the day. So for Monday, if you were going to put together a volatility band plan, you would have a hard time based on what Tesla's doing right now. There's really no trend. There was a trend earlier in the session that took you from 429.45 all the way down to that pivot line. But that trend has turned into this box instead. You've got just a box that has constrained trading all day, and it's really not directional. It's not up, it's not down. But if you had this level that you were looking for Monday, this would be where I would set up a plan for Monday morning, and I'd say this is the last trend this thing had during the day. This trend happened from overhead resistance, overhead order flow, and the reversal move that it made would give me then zones that I would look at for Monday's trading if I was inclined. I don't like setting up a plan for Monday because too much happens over the weekend, but if I was setting up a Monday plan, it would look something like this. It would be, I'd have a short from 429.45 probably down into this block right here, and then another potential short from 427.27 down into 425.97, potential short down into 424.90, and a potential short down into 423.49. Then the next thing I would do is take these levels and go back and start drilling into dailies and weeklies, see how does this overlap with stuff that's happened on a daily and weekly chart. Then I would go and look at where are Monday's pivot lines going to be. What do we expect the floor trader pivots are going to be based on today's closing price. The high plus the low plus the close divided by 3 is going to be the pivot line. And I would also look at where was the majority of the buying and selling during the periods that the stock was trending, and see how did these line up with some of these bands. And that's then how I go through and tweak the bands based on a multiple time frame analysis. So that's really what you're doing when you're looking at these longer time compressions. I really don't think looking at them on your phone is the way to do this. You really need these to be on charts on your screen so that you can line things up and look at apples and apples. You're just looking at bar charts on your screen, and you're having different time compressions, and you're not working with like an area chart on some app. You're working with, you just line them up right next to each other, and you can see exactly what it is you think is going to happen. I hope that helps.